Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing China and the USA's fires getting stoked. Tensions began to rise just after the Chinese Phase 1 trade deal purchasing agreement with the United States came into effect after causing a record-breaking move higher on the US equities, especially the Dow Jones 30, as the market expected the US economy to grow as a result. The ink was barely dry on the agreement when the coronavirus broke out in China and eventually spread across Europe before catching hold in the United States of America. President Trump often refers to the disease as the Chinese virus, and the escalation between the two nations has been growing ever since. Recently, President Trump banned WeChat and TikTok from being used by the American public and organizations in the United States, where President Trump has been putting pressure on European countries to stop using Huawei for 5G technology. The reasoning behind this is that the Chinese companies which own the technologies might send the collated personal data of US citizens and firms to the Communist Party of China. This has led to a tit-for-tat escalation building between the nations, which could not have come at a worse time, bearing in mind that the global slowdown with economies suffering due to the ongoing COVID pandemic. On Saturday the 15th of August, the United States and China were due to have a video conference meeting to discuss the 6-month anniversary of the signing of the Phase 1 trade deal between the two nations. However, this was surprisingly cancelled, with American officials citing a delay due to apparent scheduling conflicts, and where the United States requested more time to allow China to purchase more United States exports. This should have been a 6-month compliance review with the U.S. Trade Representative Robert Lighthizer, U.S. Treasury Secretary Steven Mnuchin, and Chinese Vice Premier Liu He had agreed should have taken place. Bearing in mind this was arranged 6 months ago, so it seems rather unusual that all of a sudden this should be a scheduling issue. Surely this must be down to the fact that there is a growing breakdown in the relationship between the two nations. One has to wonder what is going on in the background. Are the Chinese sticking to their part of the deal with the enormous purchasing requirements of the American goods and services, especially products from the United States farmers, which runs into the millions of tons of products? And as a result of which, this saw the US equities push to record highs. With the United States in the grip of the worst economic turndown in history, the last thing it needs at the moment is for the Chinese to back out of the deal. Donald Trump has said that the trade is, and I quote, is doing very well, but has not so far commenced on the delay of the meeting. The Chinese side are saying that, and I quote, the new day has not been finalized yet. It is known that China is behind with the purchasing agreement. However, markets are predicting that it is purely a knock-on effect from the coronavirus lockdown. This is the reason for them not being able to honor the agreement immediately. Nonetheless, the financial markets have been twitchy as the escalation grows, but US stock indices have not suffered. The American dollar is currently on the back foot due to the ongoing pandemic within the United States, and no doubt tensions between America and China will be playing a part also. The failure of the Phase 1 deal would be a political scoring point for the Democratic presidential candidate Joe Biden, who recently said that the historic agreement was failing. So what can we expect? Certainly escalations in relationships between the two nations is likely to continue, and we will see market turbulence as a result. Stock indices in the United States seem to be running on helium and are largely unaffected by the coronavirus. However, should the Chinese pull out of the Phase 1 deal, this would cause a potential sharp fall in the United States equities. The American dollar remains under pressure, and this would also see great volatility should any such announcements occur. During these times, which are unprecedented and where no end seems to be in sight, traders are advised to tread with caution and use a tight stop loss at all times. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.